Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Tuesday, the 29th of September. Starting on with Alfa Financial Software, where it appears from the saved trend lines that are on the daily chart that I was covering the stock before. Interestingly enough, we had a golden cross, I suppose, last week between the 50 and 200-day moving averages, and that's actually worked. Versus, I suppose, the 110 area, something like that. But obviously, it's late because it's a lagging indicator. But we've hit the top, the middle channel here at around 115, 16, and above the initial September peak there at 118. We've got a possibility of a new leg to the upside. The favoured destination as high as 160, which is a December resistance line projection. So above 118. 160, hopefully as soon as the end of next month. On to Bahamas Petroleum, which continues to impress. The reason for the inclusion today is that we have definitively broken this triangle pattern from March. Also got the imminent cross between the 50 and 200-day moving averages, but at least while above that triangle top at 2.8 pence, we're looking for further upside. Best case scenario over the next month or two as high as the top of the rising trend channel from back in March last year, heading towards as high as 6.5 pence, which obviously would be most welcome given where the shares are at the moment, basically doubling in price. On to Besant, which fits the bill as being one of the mini miners that should and could do well in the current environment. Rising trend channel here from back in March with a 0.2 pence target. That's now the initial target for the shares. If we manage to get through 0.2, then possibly the next destination after that would be 0.33. But obviously, this stage, as we've come from 0.1 at the beginning of the month, 0.2 would be pretty impressive anyway, so let's go for that first. This stage only back below the 200-day moving average at around 0.13 pence, really delaying the upside scenario for Bezant. One of the interesting things about the minnows in I suppose recent months is that even though we've done very well, some of the retracements from the peak have been absolutely horrific. Canadian overseas, a good example of that, 0.6 to 0.2. In just a couple of months, or 6 weeks in fact, absolutely, it's rather difficult to run that position, one can say. But the shares have bounced off the floor of the rising trend channel from May at around, 0.22 pence, and above that, we're looking for the upside to resume. Hopefully we can get up to the area of the 50-day moving average around 0.35. That was also the support area in August, so that would be a reasonable target from here. But end of day close or a weekly close above the 50-day line would then hopefully open up the prospect of a retest maybe next month or the month after of the 0.6 area. Overall big picture target for the fans of the shares by the end of the year maybe up to 0.8. But obviously it's difficult to see exactly how that would work. Interesting also if you're looking at the MACD indicator, which I've just added today as a special bonus. We're still waiting for that line to cross there, so a little bit early, potentially on a move to the upside here, so jumping the gun, but at least there has been that trend line or that support line rebound for Canadian overseas. Eurasia in focus at the moment as well, given recent news flow. Interesting here that we've got this rising trend channel from back in January. Floor of the channel currently running at around 17.5 pence. So above that we're in bull territory. We've also got neckline support on the rally since July at 16 pence. So that's the level that really shouldn't be broken. If you're looking for a trigger for a new leg to the upside, apart from the support line rebound, then an end of day close above the 50-day moving average at 20.5 pence would be the trigger, and then that would forecast a move towards 33 or 34 pence at the top of this year's trend channel. On to a stock which didn't really want to cover, but it's one of those rules of this year so far that One should look at every single situation, whether you like it or not. Interestingly here, Great Western Mining yesterday just nudged the top of the rising trend channel drawn on the daily chart from October at 0.33, and in fact today we've exceeded it, which is even more amazing. I suppose that means that that line was actually up there at 0.37, and really the situation now is that while we're above that February peak at 0.27, we can still chase higher prices, although obviously in the near term that it looks as though the shares have done their bit. If you are a fan of the stock and looking for a longer range target, 0.6 there, if we manage to get a weekly close above today's 0.38 high, would be a potential destination for the shares. On to Jersey Oil and Gas, which I haven't looked at for a while, but very strong daily candle today. We opened at the low of the day, and we're currently at the high of the day, which is, as we'll see, is what Novacyt did yesterday, in fact, for some strange reason. But we bounced off the floor of the channel from January, 103, broken the 200-day moving average at 110, and now broken that line of resistance from August around, 115. So let's say, while we're above 115, looking for at least the 50-day moving average at 137, the target over the next few weeks up to the top of that trend channel from February, as high as £1.90, so looking very strong indeed on Jersey Oil and Gas. Another stock which I was thinking that I would never be looking at again, but it's another stock which is defying the cynics, Nostra Terra. I saw an interview somewhere on the internet yesterday as well. So neckline resistance for the shares and September resistance of 0.42, so an end of day close above that today or over the week, the rest of the week, could be the trigger to give us not only an initial target of the 200-day moving average at 0.46, but best case scenario target over the next 1 to 2 months up to the February resistance line projection at 1.2 pence. At this stage, only back below the 50-day line at 0.29, really delaying the upside scenario. Stock of the day, and perhaps might be the stock of the week, is Novacyt, defying the critics, the cynics, and anybody else with a malevolent streak. I did cover this on Sunday, rather sheepishly, thinking that maybe the stock might be a bit exposed, but I think the shares were around 430 at that time. Yesterday's price action with an open at the low of the day and a close at the high of the day suggests that everyone and their mother was thinking that the shares were going to go up today, and that's proven to be the case. We've broken that resistance line target around 490, which I had, again, rather sheepishly on Sunday, and we actually seem to be going for the pie in the sky target of £7, which is now not too far away, which is a line, well, basically the top of that March rising trend channel. So perhaps £7 by the end of next month. The upside certainly valid while we hold above that peak, the last peak that we had for the shares in April at 473. If you're looking for a tighter stop, obviously an end of day close back below today's floor at 516 would be the place to be. But very, very impressive situation there at Novacyt. Not quite so impressive, and a chart request today is SYME Capital. You can see that the shares are broken out of the near-term triangle that we had, so we didn't really want to break below 0.55, which happened yesterday. The trend channel that I drew as well from June has also been broken. The main hope at the moment for the bulls really that we don't have an end of day close back below the 50-day moving average at around current levels of 0.41. If that is broken, then there's the risk of, I suppose, a move towards the 0.3 to 0.35 area, which was resistance on the way down in May. So all about the 50-day moving average for SYME Capital, and let's see whether that can be held over the rest of the week. Another rather painful situation is ValiRx, which I drew this support line there from August just about an hour ago at 25p. In the case of this stock, we need to see an end of day close either back above 25p, otherwise there's the risk of a move down to the 50-day moving average at 19 over the next couple of sessions. And what's interesting here, that even if we were at 19 pence, the RSI would not be oversold. So ValiRx looking as though it's in a bit of technical difficulty at the moment. Really needs to get back above 25p pretty quickly if you are a holder of the shares. That's it from me today. More updates tomorrow.